A lot of people blame brokers and carriers. I mean, the shippers are the ones that are doing the bidding.
You're listening to the Bulk Loads Podcast, your number one resource for everything bulk freight trucking. And this is episode 237.
Hey guys, Jared Flynn with the Bulk Loads Podcast. Got Tyler in here with me.
What's going on?
Hey Tyler, today we're going to have Zach Strickland back on. He is with FreightWaves. I guess you'd call it, he's kind of an economist.
Yeah.
If you could sum it up. But I'd met Zach several years ago at a FreightWaves conference. Have had him on my show. I asked him if he didn't mind, but he is a nerd when it comes to truck data. I mean, that's all he does. He looks at the data and puts this together, and had him on last year and had such a good turnout. I wanted to bring him back to really talk about, again, we're in the beginning months of January, but what's this outlook look like for trucking? Obviously, a lot of the signs are looking more negative, you know, when you look at freight rates especially, but you look at truck tonnages down. You see the used truck market going down. So we're getting into this recession. So I don't have to tell anybody that's listening to this that.
Right.
They all know that. But what do we do with that? And what do we do with that data? And how do we put this together to really create a forecast? And that's what we're going to talk about on this show. Zach, I mean, we can really get deep. And this guy, I think he has his own podcast, Tyler, and you'll put that in the episode notes. It's called Freightonomics. It's one hosted by FreightWaves. But he puts on that. Really encourage you to check that out. Again, I'm one of those, you can never learn too much about what's going on in the freight market. You know, a lot of our listeners are grain and feed and ag. Some of the stuff Zach talked about is overall, but we can learn from that and kind of make our own judgments of how that's going to impact our side.
Yeah, it's good timing too, because I know a lot of people out there with the past couple of years with just trucking in general. I mean, with COVID and the Ukraine war, a lot of people are like, okay, where do we sit now that we're kind of getting over that stuff? Like, where are we headed? So I think it's good to bring Zach on to kind of explain what the outlook looks like.
Yep, absolutely. So cool. Well, with enough said, here is my conversation with Zach Strickland. Zach, welcome back.
Hey, Jared, good to be here.
Yeah, well, you're just speaking before I hit the record button, how F3 was a success. Tell us about that.
Yeah, so we normally have two conferences each year, FreightWaves does. The first one happens in the spring/summer period, and it's normally outside of our home turf. We go somewhere. This next year is going to be in Cleveland, June 21st, 22nd. So feel free to check that out. And the second one is closer to home. We did it in Chattanooga this last year, and the turnout was pretty tremendous. I personally, like, normally, I think we were talking earlier, it's like there was stuff there that I would have gone to see outside of like conferencing. You know, like we had Pat Green, Larry Fleet, like some good musicians there that normally you just go on your own to go see. And I thought that was pretty cool. But as usual, it was a pretty energetic, lively environment. We got away with the weather being absolutely perfect. So good times all around.
Yeah, that's awesome. I don't think I told you this, but so we're hosting our first ever conference here next month for the bulk industry.
Oh, really?
Yeah, I told Kevin Hill with your team about it, and I think he hasn't given me a firm yes or no. I said I'd love to have one or several or however many that want to attend. But I told him, I go, you guys were the encouragers for us to actually go do that and start a conference. I've been to several of yours now, and just the power of networking with other people in the industry, seeing new technologies, but just like almost feeling like you belong to a tribe. Like, hey, these are my group of people. You know, we're doing the same thing, accomplishing the same mission. So yeah, we're super excited. Yeah, Feb 8th and 9th here in Springfield, Missouri. We're hoping we're almost close to sold out. But if you guys want to attend, we still have some tickets. Would love for you to join us. Obviously, weather's a big factor in that. But Zach, I wanted to bring you back on because man, I consider you, and don't take this offensive, a nerd when it comes to truck freight
100%.
data. Man, I think, some of the things you've shown me, I follow you all, some of your broadcasts, and I'm always just impressed how you guys can smash this data together, and it tells a story. It creates a picture of what's going on. If you're in the industry, you've known that we've had some major volatile cycles, and I know you follow this, Zach. So I want to talk about that, about the history. And a lot of people know kind of what's happened, but let's talk about that. But just to kind of paint the big picture of this podcast, I want to talk about what we're going to see going forward. And none of us have a crystal ball. But I think if we can kind of look at some of these signs, and history repeats itself, we're going to see some of the same trends going on. And I think that's where I want to really plant the seed today and talk about, hey, what are we seeing, and how can we be prepared as a community? We have thousands of people that listen to this podcast. We try to be very informative and educate them on the best decisions that we can make. So with that said, let's start there. Like what happened?
Yeah, no, it's, we're kind of caught in this flow of this macroeconomic chaos. And of course, COVID gets a lot of blame for that. But really what COVID did was it kind of uprooted some of these things that were already there fundamentally.
Yep.
The relationships with China. We were in this really stagnant period of time. I was explaining this to my wife this morning, who is in healthcare and has nothing to do with freight, but we kind of got away with this period of like historic stability, growth between the Great Recession and 2009 to about 2016 is when things started to start breaking apart again. And we really didn't pay that much attention to it. But then COVID just came in and just ripped all of that up and exposed a lot of weakness in our supply chain environment, obviously, and our relationships. And we hadn't really innovated during that period of time. What we had done is kind of grown accustomed to just status quo building.
Yep.
We built infrastructure that was made for just doing what we continue to do. So, and the thing about economics is that we really want quality of life to improve. That should be the goal of our society, is for this upward to the right curve of quality of life. And we really weren't accomplishing that. We were just maintaining this structure. And that's important to know for what we're dealing with now, because like I said, COVID just uprooted all these things. And if you're in transportation, healthcare, it doesn't matter. It's all connected to the same mechanism. So that being said, we are on the tail end of this transitional state. I say tail end. It could last another several months, where we're seeing a lot of this unraveling of this overheated climate. You talk about bubbles. We were in the consummate bubble during 2020, 2021 for transportation providers. They really experienced the highest rate of inflation for rates we've ever seen over the shortest period of time. That is that's going away. And it's because the demand cycle, consumer demand, the thing that really propped all that up and pulled all of it forward, has eased. And it's not necessarily that we've reduced the amount of demand. It's just we're coming out of a period of demand that was unnaturally propelled. It was overheated by the word describes it perfectly. People had to learn to work from home, buy a bunch of other stuff. They had to go to Home Depot a lot more often because they were sitting around with a lot more free time.
Well, and even our buying habits changed. We were ordering. And, again, we always think of drivers as semi-truck drivers, but your driver pool is the semi-truck driver, the UPS driver, the mailman, the Uber driver. So, that's an incredible amount of pressure on drivers, the driver pool.
Oh, and drivers you can't flex up that population. It takes a lot of training to get into a truck, semi-trailer. You don't just show up one day and, hey, you come hire. You can't just hire overnight. So that's the reason that for-hire carriers exist, is because a lot of these companies that may have enough volume to have their own private fleet, they don't want to have so much fleet presence that they can manage through some of these flex up and flex down periods. They need to be able to have this middle ground, and then they hand off the rest to the for-hire carriers out there. And of course, there's shippers that don't have enough volume to have a fleet at all. So what happened during COVID, they were asked to flex up faster than they obviously ever could. We saw the same thing on the maritime side. All of that stuff, there's just demand spikes to that level are not manageable. And that's why these economists talk about, 3% growth being the target, is because overheating basically is not a sustainable thing. It creates bubbles. And when bubbles pop, a lot of people fall on hard times. And we're already seeing a lot of fleets and carriers start, what I would say is, unfortunately, it looks like the front end of some consolidation, some exits. We haven't seen it to the extent that we saw in 2019, which was one of the worst exoduses that we've had in recent years.
So you're saying right now,
and it wasn't necessarily
2019 is still worse or looking worse than what 2023 may shape out to be.
Yeah.
Interesting.
Yeah. And that obviously there's a lot of unknowns in the future. The thing about this is that it's not that we were in 2019, mind you, we saw fleet expansion almost immediately as the market heated up. We had the produce runs out in California. We had Harvey, Irma, all these infrastructure damaging events. They're really just supply chain damaging events that created this overheated bubble. And then everybody ran out, bought a truck. Pretty low barriers to entry in transportation, specifically truckload. And that happened almost overnight. So demand, unlike this time where demand is being destroyed, demand didn't really reduce. It was a supply side situation. So there were new entrants flooding the market. These larger carriers added fleets. They bought up, companies. Consolidation happened to an extent, but the overall capacity side grew faster than the demand side. And then all of a sudden, all these new truck orders. I was at Daimler in June of 2018, and they were talking about how they were backlogged for deliveries, and their cycle went from 9 months to about 18 months. And then all of a sudden in 2019, all these deliveries came on. These drivers were sitting there ready to hop in their trucks, and it just crushed the spot market, and subsequently all the transportation rates came down.
Well, right now you look at news articles and everything's the opposite. I mean, I think it was a FreightWaves article just this last week that was posted talking about now the used sales truck market, man, is just crumbling down, where that was on this pace. Obviously talk about tonnage. You're talking about the drivers getting into there. Just last week, we had a returning guest, Paget Smith. She owns a permit shop where they do compliance, but they're seeing just a record number of DOTs being canceled, or I'm trying to think of the language, but being revoked. Like they're exiting out of the market at this record pace. I'm going to get this wrong, and I wish I would have just looked this quote. I thought there was they said it just in 1 month, almost, was it 10,000 or 15,000 DOTs that got revoked or got canceled? I mean, it's just a staggering number.
Yeah, we're on the very front edge of that. And that's what's alarming, is that when I say it's not like 2019 yet, that's what I mean, is that a lot of the pandemic era was kind of bound by these supply chain issues. You couldn't order a new truck and expect it to show up ever. You didn't know if it was going to show up at all. And a lot of the OEMs capped their ordering. And that's why we see these new orders come in August. There were record orders in August for Class 8 trucks. And it's all these backlog of orders that just nobody was able to count on them showing up. So it limited the amount of capacity growth, which was kind of a good thing, if I could say that, because it's capping the impact of the demand side alleviation that we're seeing. So the market wasn't allowed to grow to the top end limit. And that's good because it kept the bubble from growing too far. And so I think one of the things that is also a little nuanced versus 2019 is that the margins captured during the last year and a half, or I shouldn't say the last year and a half now, it's been since about March, April of last year since the market really started turning significantly.
Yeah.
That we had this 18-month cycle of just record margins. People were bidding out, and it was a shipper side situation. A lot of people blame brokers and carriers. I mean, the shippers are the ones that are doing the bidding. So they're the ones that are saying that's worth it to me, and that row allowed for this huge. We were looking at probably 30-40% margins on the regular. That was a standard operating margin for any carrier out there during the peak of that situation. Of course, that's all but gone away now. We're back to that 5-7% margin target that a lot of carriers are, and they're happy to get margin at all in a lot of cases. Specifically on the dry van side of things, strangely, the refrigerated side is seeing a very similar rate of contraction, which is unusual because normally the refrigerated cycle is a little bit more volatile. It's got a little bit more buffer in it than the dry van side, which is the ubiquitous commodity out there. It covers everything and everybody's got a dry van trailer. Refrigerated tends to be a little bit more nuanced, but it's not. They're having a similar experience to the dry van side because you can hook up a refrigerated trailer just like you can hook up a dry van. Yeah, and that market is seeing some bigger capacity growth than what they would traditionally have seen.
It's interesting, and this is more my opinion. I'd love to hear your opinion on this. We look at financials and rate of return in year increments, but you look at this truck cycle, and I've been in the industry since 2004, 2005. But you see these ups and downs and these swings, see these massive demand cycles where margins are really, really good. Man, trucks capacity is increasing, freight rates, really, really good margins. And then now we're in this, like you just said earlier, 5 to 7%, if they can get that. As a carrier, and I just want your opinion, do you need to be looking in bigger cycles? Again, we do our taxes and reporting yearly and all that, but should you be looking at like, hey, what have I done in 5 years? What's my rate of return in 5 years versus year? Because, okay, yeah, last year I was showing, I'm just throwing this out, like a 20% rate of return. Now I'm down to this 5%. Oh my gosh, I need to, everything's crumbling and all that, but we know that's going to come back up. There's going to be that other cycle. So I guess in my mind, sometimes we're looking right here, and I'm saying this as you're listening. I got my hand in front of me, but like, should we be looking further out down that way? It's easier said than done because, man, when you have those bad months and cash flows seem tighter.
Oh yeah,
man, things get that. But I'd like to hear your opinion on that. How, if I'm a carrier, and again, I'm speaking towards more the smaller owner operators. That's the meat and potatoes of the people that we serve in our industry. There's bigger companies, and maybe they think that way. But how should these smaller owner operators, smaller fleets, 5 to 10 truck operators,
oh for sure,
how do they need to be thinking about this? Because again, a lot of these guys, there's some uncertainty. They're like, hey, man, my insurance is up. Everything's up. My tire, all my costs are up now, and my margin is dwindling. What do I do from here?
Yeah, that's a fantastic observation. I kind of criticize the financial sector for being overly reliant on the 12-month cycle. Like the economy doesn't care what time of year it is. Like we have seasonality. We have seasonal things, produce runs, but even nature to an extent doesn't care about our calendar. The produce runs out of California vary by sometimes months at a time, depending on the rains and the climatological changes. But even within that, like economic cycles last on average, especially for the trucking industry, between 12 to 19 months. And that was before COVID. And I think what we're seeing now is an exacerbation of that. I think anytime we see this energy, I was talking about the COVID breaking this static economic environment that we kind of grew to rely on. And it made us overly reliant on seasonality. Like we kind of always, if you look at some of these indicators, they say seasonally adjusted. I hate seasonally adjusted figures because every season's different. And we at FreightWaves, we obviously have lots of data, and I cannot overlay. We have a seasonality feature in our Sonar platform, and there is not one index on there that I can overlay over the last 4 to 5 years that lines up exactly with the previous year. And that right there is kind of this concept that you're driving towards here, is that economic cycles do not care what year it is. Those persist. And if you're looking at it now, the transition, we have our demand side index, our outbound tender volume index. You can't find seasonality in it. It's basically gone a downward slant since March of last year. And that's just an indication that overall demand is falling throughout these periods where shippers would traditionally say, oh, I need to get freight here. They don't need it because they ordered a bunch of it last year. And that's the type of thing that throws these seasonal patterns off, is that shipper behavior is now full of uncertainty. They don't know what's about to happen next. I went to Gartner in June of last year, which is, of course, a supply chain symposium, and it's one of the biggest ones. And I was talking to a lot of these companies, and it was like a therapy session. So carriers obviously feel like this is a struggle all the time. These big companies don't care. When I ran a panel, and it basically turned into I'm okay, you're okay, or I'm not okay, you're not okay, and that's okay type of discussion, because they were all saying one thing to each other: how do we forecast demand better? Because they're held accountable. Yeah, I mean they were.
What made me laugh about that? So this conference, I just said at the beginning that we're hosting. So we sent out a questionnaire of like, what are the top 3 concerns? And this was sent to shippers, brokers, and carriers. That was the number one request right there. How do we forecast better? How do we plan better? And this was by shippers too. Like, how do we create less volatility in the market? That was number one.
Yeah, it's. I mean, and they were. See, if you think about it, at some of these larger companies, these S&OP, supply chain and ops, or sales and ops people, as they call it, they have to forecast having stuff, and then they have to forecast the people wanting their stuff. So it's a full throughput for them. And of course, transportation providers are sitting there in, the various connective portions of that cycle. They have the upstream and they have the downstream. And they were struggling with both throughout COVID because they couldn't get the goods that they needed or forecasting to want in a timely manner. And then they couldn't forecast that the consumer wanted them. So even now, and I just wrote an article about this on freightwaves.com, and it actually got, and it's funny because it got some of the best traction of any article I've ever written. And I'm not joking with you. Yeah. I wrote that in an hour because I was struggling to figure out what I needed to talk about this week, because it's January, and January is typically a very dead month. But this one topic of shippers still not being able to order the appropriate amount of inventory, and because demand is falling at a faster clip than what a lot of people forecasted for.
Is that the name of the title, by the way? Or what was I'm going to look it up.
Inventories fall faster than demand or transportation demand in December was I think the title. But yeah, it's, and again, towards the end, we were talking about what do we do moving forward? Well, everything winds up in the consumer's hands. And I put a little piece down there in the end, and the consumer has been trained to buy their way through everything. And there's a few little charts in there that kind of explain where the consumer is. The consumer has not fully realized that they're actually in a much worse position than they are, because they've been rewarded for spending, and they kind of had these stimulus packages that really propelled them into this spending habit. And they're not understanding that as the Fed is increasing interest rates, on the other end, they're throwing it back on their credit cards. And this is not everybody. This is macroeconomically speaking. This is very, large scale type stuff. But credit card debt is almost nearly the exact, we've recovered all the way back up to the rate at which we were growing it prior to the pandemic. And that's after it deteriorating almost to nothing during the pandemic. So consumers have just said, we're not saving money anymore. And some of it's necessity, obviously.
Right.
The inflation situation is pretty bad. The one thing that's held it all together is wage growth. But the consumer conditions moving forward will be the critical component for how this economy kind of deals with 2023. If we have a hard or soft landing, as I'm sure a lot of people have talked about, or you've heard them talk about.
Yeah. I mean, that's a whole other subject. I have so many questions just on the consumer spending because, like I said, are we better off for the stimulus, or should you just let it take its toll? Do we just kick the can? We're gonna save that for a whole nother conversation. That's
Right.
There can be some opinions in that. I want to talk a little bit more, and I want to land the plane here, Zach. But just talking about carriers right now, they're in this situation where they're seeing this market going down. They're seeing freight rates go down. They're seeing all their costs going up. How should they be looking at this? Because I don't want this to be in a negative lens. I mean, these things aren't positive, but how do we prepare? Because the market's going to adjust. We're going to see this narrow back out. I think, and I wanted to say this earlier too. A friend of mine, he works for Amazon, AWS. And one time we're sitting at my son's basketball game and we're talking, and he's talking about AWS, and he goes, the interesting thing about this company, Jared, he said, we don't think in years or 1 year at a time. He goes, we're thinking 5-10 years out. Our strategy and vision, we're building 5. I mean, that's the way we look at it. We don't look at, if we had a negative year, that means nothing to us. We're looking at this long-term cycle.
Mm-hmm.
And it's interesting. I think as business owners, leaders, like maybe we should be thinking about that. Now we got to make sure that we're protecting ourselves and we're not stretching ourselves too thin in companies.
Absolutely.
But man, if we're just looking at year-end numbers and not longer, maybe we should as carriers because you're following these cycles. So I'd love your input.
As a carrier, I hate to say it, but the time for preparation is gone because we're in it. You can't prepare for something that's already present. Yeah. And so I'll share a story. Craig shared this with us. One of his friends ran a 50 truck fleet operation. And he was slow to react to the conditions of the market last year. And he exited, unfortunately.
50
and
trucks
that's
gone.
not 50 trucks gone. Now, I'm sure that somebody swallowed those up somewhere. But the bottom line is that he failed to recognize the conditions of a deteriorating market. And he was not monitoring the larger picture, which is exactly what your AWS friend really is talking about. When you're talking about multi-year plans and strategies, you have to be cognizant of the environment that you are operating in. You cannot just look at your year-over-year figures, which is something that my company that I used to work for used to do in that 2010 to 2015 period. We just applied previous year's numbers forward and just kept sitting in that cycle and we didn't care what was going on around us. And that's the one thing that you have to as an operator, because you can get stuck in your day-to-day, in your tactical operation, and you're just thinking, I'm going to focus on servicing this client, this customer to the best of my extent. You have to look outside of your worldview at some point in time. It doesn't have to be every day, but there has to be some sort of strategic planning that is a multi-year, multi-cycle view of how you're going to operate. And you have to build in risk thresholds. And that's what a lot of these larger companies tend to do. Not all of them do this, which is surprising to me, but they have these departments that are designed to incorporate risk into their forecast.
That's beautiful.
And
that's awesome.
As a smaller operator, it is so hard to break out of your little narrow experience. And that's one of the biggest, probably tips that I can give any smaller company, small fleet operator, is you have to be aware of your environment, because the tide is going to bring you with it, regardless of your, what you think you're doing right. You can do everything right and still not succeed if the environment basically tanks you. I was talking about JB Hunt earnings on my podcast yesterday,
Yeah.
Freightonomics, and I'm using them as an example here because, like you're talking about with these annualized cycles, they're comparing JB Hunt's performance. These financial analysts that make lots of money, and this is their job, they're comparing JB Hunt's earnings miss in the fourth quarter of last year to the previous year. Everybody missed in the fourth quarter of this year compared to 2021. And JB Hunt just happened to be the first one to report it. Their brokerage arm just tanked in the fourth quarter. And it had nothing to do with the quality of their service. It was purely the environment that they were operating in. They went from the peak spot market environment in Q4 of 2021 to the worst spot market environment imaginable in Q4 of 2022. And you can't avoid that. It's like if you have money in the stock market, you're trying to outperform the larger market. You're not trying to just win every year because you can't. The market will not let you. The environment will push you in the direction that it's going in, period. You can hedge yourself to that market exposure, hence the name hedge fund. And that's what I think operators, smaller operators, for sure. I mean, nobody told me about this, back in the day when I was a financial analyst. But that's the point, is that you need to make sure that you are not all in on one customer or, even one commodity. You want to make sure that you have some way, if the produce runs don't happen and you're a produce hauler, you need to have something else that gets you back to California or to Florida or to Laredo. Something else has to sustain you or basically keep you out of that, rising and falling tide to the full extent.
Yeah. No, I think that's beautifully said. I think not all, but we want to point fingers and blame at the market conditions. Like this is the fault of somebody.
Right.
Again, there's some that they want to blame the shipping companies. They want to blame the brokerages. They want to blame other carriers for the way the market is. And the truth of the matter is, the market's the market. It's whether it's the trucking market, the stock market, the grain market, it's the market, and you're going to see these cycles, and we are in that cycle. Many people know that, but I think if we just again bring that to the forefront, I love what you said, and I'm going to end with this one. But yeah, creating that risk threshold, just knowing that up front, that hey, what is the risk tolerance, and what is it going to take to where build that into your operation. And you don't have to be a huge and have a full-time staff doing that. I think even as a small business, you can build those thresholds and know, hey, if this happens here, this happens. Like I'm building this in here, knowing that there's going to be, as we keep talking about, choppy waters, high tides, low tides, whatever, in there. But that's what's going to sustain me until I get to a more positive, wider margin market.
Yeah, it's hard to predict what the market's going to do, especially right now. Like even us, we have all this data.
Yeah.
And we have trouble because it's not just about finding A plus B times C. That might work for a period of time now. What we're finding, and what you kind of know inherently, is that formula actually changes. Sometimes it's A times C minus B that gives you the most reliable forecast. And it's because people's behavior changes. The society changes. Shipping patterns change. Supply chain changes are probably going to be one of the biggest things to watch moving forward. If you're an operator out there and you're not watching shipping patterns shifting, Los Angeles, Long Beach, been the entry point for a decade for the majority of goods and freight coming in, especially retail freight. That's changing. That's already changed. The East Coast now has a lot of that freight, and import volumes are changing into where this North American centric shipping pattern is going to become more prevalent than the import. Not more than, like, you can't just replace China and Asia overnight, but you certainly are seeing this shift already manifesting. Texas, for instance, when I talk about the experience versus the market, Texas volumes on the dry van, refrigerated, flatbed commodity have been more resilient out of Texas than the rest of the country. Now, why is that? Is the question, and the reason is one, a lot of people shifted their import patterns to the port of Houston versus Long Beach, so there's a little bit of that West Coast erosion. But two, Texas is a beautiful centroid if you are building a North American supply chain distribution network. And we're seeing some of that already start to play out. And so if you're trying to haul freight, maybe you haul grain, but there's other commodities that are sitting out there that are going to be impacted, upstream and downstream of what you normally do. And I think that's something you have to monitor moving forward.
Yeah, to be proactively thinking. So, well, we are out of time. Hey, Zach, thank you so much for, again, coming on. You are a wealth of knowledge on this. Appreciate you just bringing this into perspective, especially for our carriers and especially in these times, because it can be difficult times. And again, we can talk about this. We don't own trucks, but these guys out there are some that they're seeing tight margin struggles. And we are very cognitive of that. And on our end, trying to figure out ways, how do we all work together to continue this cycle and help our clients out. Man, I'm going to be on the lookout June 21st and 22nd in Cleveland, man. I don't know if I've seen that yet, but I'm going to be looking for for tickets to go on sale. We'll put that in our notes as well as that gets closer. If you've never been to one of their conferences, highly recommend it. Even as an owner operator, you're going to get so much. But if you are in freight tech, especially shipping market, these guys put on a show, and I will leave it at that. Zach, thanks again for coming on.
Thanks, Jared.
Tyler, my biggest takeaway, and I probably pulled this more from Zach, but was to how to look at profitability in trucking.
Yeah.
And you and I both know farming is very similar. These farmers, we have these waves, you have, 1 or 2 good years coupled with 3 to 4 bad years, or average mediocre, but you got to look at that span of years, really. And again, I'm not blind. We have to do our taxes stuff on an annual basis, and you're reporting that. And I love what Zach brought up, even JB Hunt, they had to report last quarter. Well, there wasn't one freight brokerage company that were posting positive earnings. I mean, The market is just down. But I love to kind of put this in perspective, like, hey, we need to look at forecasting out there, but look at our profitability over a course of maybe several years, not just 1 year, because we have these swings in the market.
Yeah. And I think whenever you start looking at it that way, you'll actually start to see a different result than you're just looking at it. What's today look like instead of what's those 3 or 4 years they might average out overall, and then you can plan your business accordingly to those numbers.
Yep. And I'll say it again, you heard me tell Zach about that, a buddy of mine that works for Amazon. I mean, they are one of the largest companies now in the U.S. And one of the ways they become that, he said that they don't look like in year increments. They look in 5-year increments and 10-year and 15 years. That's how much they're planning. And again, they're doing things different than everybody else. And now we're seeing the rewards. I can remember years ago, people were, speaking of them, the people were saying, man, the numbers don't match up. What they're doing doesn't match up. Well, man, it's paid dividends. So that's an extreme example, but I think it just kind of makes us think different when we're looking at these cycles of how we should be really gauging or looking at how strong and how successful our businesses are doing financially.
Yeah. And I'm glad you brought Zach on. I know in this office, we like Freight Waves. A lot of guys watch Freight Waves every day in their office on Freight Waves TV. You've been on Freight Waves a couple different times, Jared. But yeah, I think Zach, he's a smart guy. He's a market analyst, and he can bring really good information every time he comes on.
Yeah. I said that on the show, but again, they are having another conference coming up June 21st and 22nd in Cleveland. You go to freightwaves.com. Again, you may be listening as an owner operator, maybe a small business, think, man, it's not going to benefit me. I tell you what, I've gone to several of them, and these guys put on a heck of a show. I mean, it's super educational, very informative, very, very entertaining, and just the network effect. I used to not value these things, but these guys have kind of created this tribe now of people in freight, and have really done something that nobody else has done. So check that out. I'm sure if you go to freightwaves.com, you can purchase probably tickets there. as well. And again, they were one of the ones that really encouraged us to look at doing our own Bulk Loads conference, which is coming up next month.
Yep, we're very excited for that.
Yeah.
Also, Jared, we do have lots and lots of calendars. They finally came in. I know we mentioned it a couple of episodes ago, but if you would like a calendar, we'll send you one completely for free. How you get them, you can go to our forum. There's a calendar post there. I'll bump it up to the top so you can see it right there, or you can go to our Facebook page, message us, and we'll send you one there, or simply just send us an email, support@bulkloads.com, and we'll send you one as well.
Yeah, the calendars have turned out awesome. We our first ever ones last year. You've done a better job this year, Tyler, making me that much more awesome. So yeah, we have a pile of them here and we want to give them out to you. So contact us. It's super simple. Again, you can contact Tyler, go to our forum, go to our social media, anywhere that you can find us. We'll get a hold of us and we will gladly get them out to you. So cool. Well, that's it for today. Thank you as always for listening to the Bulk Loads podcast. Please make sure to subscribe to this and share with other people, and God bless.